Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. A very interesting week it's been. Now, what we got going on in the stock market today? Well, the Dow is kind of flat and the Nasdaq's down about 150. Now, this market, in my opinion, is going to be heading lower. Look it. Here's what we got. Okay, so we had that high last week on Thursday, right? And then we came down and then we came up and made a lower high, and now we've got a lower low. This market has reversed, and as long as that high that we had last week on Thursday, as long as we don't go above that, this market's coming in. Now, I'm trading it to the downside. I got my stops right at that high. So I don't think we're going to get above that high. I think that high is going to hold and the next leg down is going to be lower. Now, I'm selling all the rallies, right? I'm selling into the rally. If we get a bounce up, I put more shorts on. That's just what I'm doing. You can do whatever you want to do. Of course, it takes two sides to make a trade, so half of you probably believe the market's going higher. And it may. I'm not saying 100% for sure that we're coming down, but I do believe it, and that's the way I'm moving it. Okay, so the VIX, yesterday, the VIX had the breakout, right? We're getting that volatility back in the marketplace. Now, when volatility goes up, bad things happen to the stock market, and it starts to come down. Now, the HYG, which is the junk bonds have already started to drop pretty hard, and they're going to put this market lower. The junk bonds lead the market. Now, what are junk bonds? Well, they're the bonds that, zombie companies, they have to borrow money, right? So as the bonds go down, the junk bonds go down, the money that they're borrowing goes up in a higher interest rate, which means it's much harder for them to borrow money, which means much more likely that a lot of these zombie companies are going out of business, and that's going to send the market lower. Once again, this is just my take on the market. So let's get over and get my take on the real estate market. Now, a lot of you don't agree with me on the real estate market. I'm calling for 50% off of the highs. Okay, 50% off the highs. Now, we're only down 10, 12% right now. And that's really a drop in the bucket. We've had rallies of 20% and 20% year after year. The housing bubble's never been bigger, right? This is a big bubble, bigger than it was in 2006, which means it's going to crash harder than it did in 2006, 2007, that bubble that ended with the great financial crisis is where that bubble ended. All right, so a lot of people believe that the cooling inflation is going to make homes affordable again, the cooling inflation. All right, well, you see, I have a different take. Now, they believe that the cooling inflation is going to bring the mortgage rate lower. They think the mortgage rates are going to come down to below 5%, below 4% again. This is what they're telling you. This is what the agents are trained to tell you. They're telling you this to get you to buy now so that you can buy at these cheaper prices, which are down 12%, and then go refinance at the lower rate of 4 or even, below 4, right? But it's not how it's going to play out. That's not my take, right? Now, we were up at 7%. We came down to 6%, and everybody's celebrating this. All right. Now, inflation, it was up there at 9%. It's come down to 8%, and everybody's celebrating. Everybody's celebrating this disinflation. Now, it's going to be funny. It's going to be funny to me when that inflation raises its head again. Because, I don't know if the Fed can lose any more credibility than they've already lost. I mean, they come out and tell us this was all going to be transitory. And now they're celebrating. They're celebrating this disinflation. Well, I got news for you. This disinflation is going to be transitory. Inflation's going to raise its head again, right? And what's the Fed going to have to do? Well, they're going to have to raise rates. All right, so now they're planning to go to 5%, but I say the Fed's going to go to 6%. 6% is where they're going to have to get this just to kind of pretend like they're fighting inflation. Really, they're going to wave the white flag against inflation eventually, but I think they're going to push rates up to 6%. The Fed's not going to pivot. It's not going to stop raising rates. Now, what's going to happen to the mortgage rate when we push it up to that level of well, when the Fed raises to 6%, mortgage rates are above. That's the Fed reserve rate. Mortgage rates will be about 8%. Now, they'll be about 8% for, well, if you have an 800 credit score, you could probably get an 8% mortgage. But for those that don't have 800 credit scores, it's going to be closer to 9, maybe even 10 if you have a low credit score, right? Now, why do I think inflation, well, is not transitory? Why do I think it's still going to be coming back? Well, there's a lot of reasons for this. One is the decline in the dollar. We've declined. The dollar has dropped. Oh, it's dropped about 10% in the last 3 months. Now, people go, but Mike, it's going to jump back up. And it may, but I'm just saying the direction of the dollar is lower. And that's going to add things to all the imports. See, we don't make stuff in the U.S. So when we have to buy it, we have to bring it into the country, right? And we send out our dollars. That's what we make. We make dollars and we send those out. But our dollars have lost 10% in the last 3 months. This is going to push inflation rates higher. Now, there's been this trend in the last 30 years. There's been this trend of globalization, right? Where everything's made overseas. We don't make anything here. And that's got us this cheaper rates. We can make things overseas cheaper than we can in the U.S. Well, right now we kind of the push is for reverse globalization to bring the manufacturing jobs back to the United States. Well, what does that do to inflation? Well, it kind of raises the rates. You see, we pay more for labor than they do overseas. So the price to manufacture in the United States raises the rates. Now, a lot of people think oil is going to go down. I guess it's trading, around $78 a barrel. And, Biden, well, he drained the oil reserve to bring inflation down, and it temporarily is working, right? We getting disinflation, and that comes from a lot of the oil price being down. But eventually he's going to have to buy back the oil because we'd like some in the Federal Reserve, for the oil so that we can, if let's say we ever went to war, a lot of war out there right now, a lot of talk of war. Well, we're going to need some oil. That's where you use that emergency reserve. You don't use it to lower inflation, but that's what they did. They drained the oil to lower the inflation rate. Well, they're going to have to buy that back eventually. Now, my guess, they're going to be buying that back when it's over $100 a barrel. Now, that's just my take. Maybe it comes down to 60 or even 50 first, but that oil is going to go higher. This is going to bring inflation, which the Fed is going to try to fight by waving, they don't want to wave that white flag yet, but they will eventually. But they're admitting they're going to push rates over 5%, but I think they're going to get them up to 6%. Okay, so that will push mortgages up to above 8%. What do you think that's going to do to the housing market? Now, of course, in your area, that's going to make houses go up. But in most areas, when you raise the mortgage rates, the houses tend to go down, right? Now, what else is going to make the houses go down? Well, let's talk about all these layoffs. Now, there's a big debate. Are we in a recession? We're not in a recession. You definitely can't say the D word, that depression, but I think we got a depression coming. I really do. We've had this artificial run for the last 12, 14 years in the markets, and it's been the printing of money, right? And you cannot print your way to prosperity. I'm sorry, but you cannot. But maybe we're not in a recession. It feels like we might already be in one. But let's say we're not in a recession. Well, here's what we definitely know. We definitely know that all these layoffs are coming, right? That we know. They're in the news every day. Yahoo just announced, 10, 20% of their workforce, 1,600 jobs going away, Google going away, Meta going away. I mean, the jobs, they're just every day, more layoffs. And even Bank of America and Citibank, I mean, they're agreeing that there's going to be about 200,000 jobs a month lost throughout the course of the year. 200,000 layoffs. That's a lot. Now, that's going to affect what? What is that going to affect? Well, it's going to affect eviction. Some people just rent their property, so the eviction rate's going to spike up, right? I mean, if we're off the eviction moratorium, in most areas we are, LA, they're still on an eviction moratorium. moratorium. What is it? 3 years going on 4 years? I don't even know. But they still have an eviction moratorium. It's just, to me, that's just crazy. But okay, but evictions are going to spike up. What else is going to happen with the layoffs? Well, with the layoffs, I would imagine we're going to start to see a lot more foreclosures coming. Now, people go, but Mike, everybody's got all this equity. There won't be any foreclosures. Well, you see, that equity is going to start to go down as home prices go down. The equity in the homes go down. This makes people really nervous, which forces people to sell much faster than they were planning to. But as that equity starts to go down, there's going to be some forced selling, right? Okay, now we've already starting to see it just in the last year. If you buy property in the last year, you put 5% down, you're probably already 5 or 10% underwater. And you're going to get farther underwater and farther underwater. And eventually, well, you're not going to be wanting to make your mortgage payment anymore. You're just going to be too far underwater and you're just going to stop making your payment. The bank comes, they foreclose on you, and then the house goes onto the market. After the bank takes it back, they call a broker like myself and they say, Mike, put the house on the market at any price you can get, because we don't want to hold the property. The banks aren't in business of holding the property. They don't want to be the bank holder. They want to dump that off on someone else. And that's what they do. So, okay, so the forced selling is going to be coming into the marketplace, which is going to, once again, it's a stair step down, right? They're just going to be circling the drain, lower and lower and lower. Now, in your area, maybe 8, maybe 10% mortgage rates, maybe that will make houses jump, but it really doesn't work that way. A lot of people, they're just in denial. A lot of these sellers I talk with, I deal with a lot of sellers, and they're pretty much in denial. They go, Mike, there's no problem. There's no urgency to get out. And, in their mind, they can take as long as they want. But once they actually see the prices of their neighbor's house dropping, well, they'll change their mind. People do. It's kind of weird. When houses are going up, people don't really sell. They want to hold on to the house, and for good reason. It's going to be worth more next month. It's going to be worth more 6 months from now. But here's the opposite effect. When it goes down, starts going down, well, it's going to be worth less next month. And 6 months from now, you might be really freaked out when you know how low it goes. And that 50% number could be conservative. Well, I hope I didn't disappoint or depress anybody on a Friday, because we got the weekend ahead. And I'd like you to give me the thumbs up. Why not? Why not? We got an exciting weekend. Anyway, Super Bowl weekend. Who's going to win? I guess it's KC or Philly. It's going to be exciting. I always like a good game, but when I watch it, I love to watch the commercials. Do you know that there's no cryptocurrency commercials this year? Do you remember last year with all those cryptocurrency commercials? I mean, Steph Curry was pushing them. Matt Damon was pushing them. FTX, I think they bought all these slots. None of that this year. What happened? Where'd they all go? I don't know. I'm not making fun of those crypto traders, but you're not going to see any commercials for that. We'll see what we see commercials for. Very exciting. Give me the thumbs up. Get out there, everybody. Have a great weekend. Hit the subscribe button. I want to talk to you again next week. Bye-bye now.